This week, TradeBot wants to know.
Algo trading allowed in India?
Uh, Let me think. Let's find out. If you don't already know what is algo trading, please watch our previous video. Now to answer the question, we must know how algo trading works. First part of algo trading is designing an automated algo system. Then to approach the exchange for approval of algo system, as only approved algo systems are allowed to be connected to exchange service. If the algo system is approved from exchange and connected to exchange servers, then the automated algo systems will be able to file trading orders to the market as simple as this. This is how the big fund houses and institutional investors are operating in India. But for the small retail traders, the game is completely different. Where firstly he has to build an automated trading system, it is not easy for him due to the requirement of high-tech coding skills, strong strategy, and of course precise math. But even if he managed to do it all, the next step is to get approval from exchange. In India, unfortunately, exchange doesn't allow a retail trader to run a fully automated system on its server. So his attempt to go algo fails here. But there is a workaround. Let's talk about it. Exchange only allow orders from the system that it has approved. So this means if an already approved system allows us to send our orders through its approved API, we are good to go. There is one such platform, that is Zerodha Kite, which allows us to send our orders through its API. When our orders are sent through its API, they are received by Zerodha's approved web platform called Zerodha Kite, from where the orders can be sent directly to exchange servers. So the problem is solved. But there is a twist involved. Zerodha only allows semi-automated algo systems through its API. Let's try to understand how it works. The first step of semi-automated algo trading system is to design a trading strategy. Trading strategy will include when to buy, when to sell. For example, buy when RSI indicator gets oversold. Then we have to include the quantity of trading, then indicators to use, for example RSI, moving average, etc. And then stop loss rule and profit target rule. Once we decide all these parameters and form a trading strategy using them, we will proceed to backtesting of strategy using historical data, where we will test what would have happened if we had applied this strategy in past 1 month, 1 year, or whatever testing period we choose. In testing, we will check for number of wins and losses, number of winning trades in a row, number of losing trades in a row, maximum gain and maximum loss in a single trade, average gain in all winning trades, average loss in all losing trades, and maximum loss of capital, also known as maximum drawdown. If we like the results of testing phase, then we will move to deployment of strategy part, where we will connect our strategy to platform's API. Once the strategy is deployed and live, it will automatically search markets for trades using our trading strategy. And when it finds a trade satisfying the rules of our strategy, it will send us the alert on the platform. And when we receive the alert, we just have to confirm the execution of trade in a single click. And as soon as we do that, our trade goes live to the exchange servers for execution. To get the access to Zerodha's API, you must have a Zerodha account. Opening Zerodha's account is very simple and fast. If you have an Aadhaar card, you can open the account and make it live in less than 10 minutes. The two-step method of opening Zerodha account is mentioned in the description of this video. In the first link, you have to enter your name, email ID, phone number, keep the fourth option unchanged. And in the next step, fill in your name, mobile number, email ID, and click continue.